All right. Hey, everybody. Welcome back. We missed you. I don't know if you missed us, but we missed you. But we also didn't want to waste your time on Tuesday by not having a whole lot to say. And I don't know that we're going to have that much more again to say, but there is some clarity that we got on the most recent interim final. Advice that we got and guidance from PPP. So, I think what I'll do is, and just as a reminder, as people are getting on here, ramping on, use the Q&A button to hit your questions, and then you can harass us on the chat if that's what you want to do. And some people love doing it, so we're happy to oblige. So, Adam, you want me to pass it over to you and then throw it over to Jack, or how do you want to go?
Yeah, that's fine. And as always, this has been a good combination of Jack fact checking me without making me look really stupid when I say something that is factually incorrect. So I appreciate that, Jack. You would be more than welcome at BGW if you ever want to switch careers, because that happens a lot in this organization.
Thank you. Well, I'm glad that it doesn't happen often. So, yeah.
So, a couple things. They came out, as Gary alluded to, they came out with the interim final rule, and then without actually updating the amendment to the interim final rule, they just updated the document. And then they issued another document. And, the funny thing is, the last posting was something like 34 some odd pages that went into painstaking detail about what types of convicted felons could qualify and which kind of convicted felons couldn't. But they still only have like a paragraph on employee forgiveness or employee rehiring and stuff like that. So I say that flippantly, but they did spend a lot of time on convicted felons. I found very interesting. So I don't know who in government is a convicted felon that was really worried about their loan forgiveness, that wanted their exception made or not. But probably the biggest thing that we saw that changed in the update to the document that they didn't tell anybody that they updated was just the clarifications around owner compensation. So, Jack, if you got it in front of you, maybe you can give people a page reference. I've got it on my iPhone. Actually, it looks like it's page 13 and 12, 13, and 14. They talk about owner compensation. And what gets really confusing in that is that, the original intent, and they use a very good example, which is, let's say that you're a 2-employee company, it's just me and Gary, and I get money for both me and Gary as the owner. Now that I have this 24-week period, I say, sayonara, Gary. I'm going to use all the money for myself. Because had they not done some rulemaking around that, that's exactly what I could have done. So they put this cap in place with respect to owner compensation, depending on the 8-week method or the 24-week method. But the bottom line is the cap is $20,833. And then they give some examples of various ways that you get to that calculation, depending on sole proprietor, S corporation, C corporation, general partner, and a little bit of the logic around that. And I think that what gets really confusing in all that is that they say the cap for these types of entities is $20,833. And then they say, well, but in a C corporation, it's limited to 2019 cash compensation, plus this, plus this. In an S corporation, it's 2019 cash compensation, plus this, plus this. In a general partnership, it's 0.92 whatever times your self-employment earnings for 2019. End of paragraph. Start of new paragraph. Owner compensation should be capped at $20,833. So, you don't really know, is it $20,833 for some limited circumstances or overall? We're going to make the assumption right now it's for overall. Until being told differently, in case anybody has any questions about that on the call, could change, down the road, who knows. But for right now, that language, I think, is confusing because they didn't put it all together and make it extremely definitive in their pronouncement. It still has a little bit of interpretation sitting in there. Probably the second thing, this didn't really change, but there probably have been some questions about it. I know there were on earlier webinars that if I reduce someone's salary due to a reduction of hours, what happens? Well, as long as you didn't change their hourly rate any during that time period, then that doesn't qualify as a wage reduction. It qualifies as an FTE reduction. So as long as you made the offer to restore the hours, or you did in fact restore the hours to get the count back up, then you go ahead and still count that person. What I also found interesting is that in terms of the exception for, hey, I try to get people to come back to work and they told me pound sand, all it says there is it says employer must maintain written documentation, not what that documentation actually is. So it looks like they got a little bit more liberal from the original statement that you have to have written rejection from the employee. So that's what I know today. And I'm sure Jack's got some other nuggets of wisdom that he's going to give us.
Sure. So a couple of things. I would first suggest that, as painstakingly as this might be to read through a Department of Treasury document, that you go and do that and you take a highlighter and you go through it, because it does have some examples and says, for example, and walks through calculations and all of that. So I would also remind you that, for example, if someone were to watch one of these videos from a couple of weeks ago and take that as the way things are, that's a problem, because things keep changing. So, it's they two steps forward, one step back, and we've seen that over and over again. So it's like a broken record that continues to happen. So all we can do is go with what we see in this current documentation. To Adam's point, it talks about the same things. There's not a whole lot of new things in there, except for the fact that they do now split this hair of C corporation, S corporation, owner, independent contractor, but spend a very little time of the 35 pages in doing that. So what I'm going to do is, in order to kind of short circuit some of the questions, is to briefly go through some things that I've highlighted in this 35-page document to highlight that for you, but also suggest that you go through it. We have not, and I don't know if you guys, Adam and Gary, have done this, but we have not created a flow chart yet, because we create a flow chart and then it's going to change. So, and interpretations are going to be different. So the first thing is, and there's also, and as I go through this, there's a couple of key components that are more highlighted now than they were previously. And that is the date of June 5th. And I'll demonstrate that. June 30th, 5 days from now, you're either applied or you don't. And it's clear every time that they open up their mouths, whether it's SBA or Treasury, that you either, if you haven't jumped into the fray, July 1st, you're SOL. So, if you haven't, please do so. Another thing, and this is tangentially, there's discussion about, and continues to be discussion about the next level or the next installation of stimulus money into the into the equation. And so that's why, we talk about, should I go ahead and apply for forgiveness now or apply for forgiveness later? And there has been some language in these pages that address that as well. So let me, again, just so to try to cut off people's questions, similar questions, to just go ahead and answer those, and we can kind of deal with the differential. So, they talk about the setting. Oh, and one more thing. A lot of this is administrative. So it's kind of saying, all right, we said this, but now we have to modify the forms and do other things. So the 35 pages is a lot of administrative stuff. But some of the meat and potatoes of it is that, we know that 75 to 60, and so hence it's 25 to 40 on the non payroll stuff. That and then they talk about the process that the banks have with respect to the SBA in the approval process. So it says that the lender has 60 days from receipt of a complete application to issue a decision. If the lender determines that some or all is to be forgiven, they hand it over to the SBA. The SBA has not later than 90 days after the lender issues its decision to basically pay the bank the money that they borrowed or they lent out that now is forgiven. So therefore they're getting their whole paid back. And then if applicable, the SBA will deduct the EIDL advance amounts, so the 10K off the front end into that forgiveness amount. So next on the deferral, if the borrower does not apply for forgiveness of the loan within 10 months after the last day of the covered period, and this is generically covered period, meaning covered or alternative covered period, then the PPP loan is no longer deferred. So the 10 months, it was, okay, when do we have to apply for, and there's speculation, there was actually a different standard. So it's 10 months. And then when can the borrower submit it? So 10 months is the extended period. Borrower may submit anytime on or before the maturity date of the loan, including before the end of the covered period, if the borrower has used all of the loan proceeds for which the borrower is requesting forgiveness. If the borrower applies for forgiveness before the end of the covered period and has reduced employee salaries in excess of 25%, then you have to account for that. So you have to go through the spreadsheet or go through the application, the worksheet, and the three components of the forgiveness application to get through that. So you're applying all of the deducts and everything else. We know that the extended length of the covered period is 8 to 24 weeks. And here's where the June 5th date comes in. It says, while allowing borrowers that receive PPP loans before June 5th to elect to use the original 8-week covered period, which implies, it doesn't state this, that if you are after or on or after, because it says before June 5th, that you don't have a choice. You have to use the 24-week period. That is and I'm throwing you in the bus on this too, Adam, a Jack and Adam theory, unless you disagree with me, because it just doesn't say that yet. I think there will be clarification because people are asking, and it's a good question to ask. So, and then it does say further that a borrower that received the PPP loans before June 5th may elect for the covered period to end 8 weeks after the date of distribution. So again, talking about people who got their money before June 5th, not saying that anything about the post June 5th and an 8-week period. They haven't made that connectivity yet. Okay, there also have been questions about incurring the expense, the payroll expense, and the shifting of this period. When does the covered period, when does the alternative covered period start? So again, reading from this, the payroll costs are considered paid on the day that paychecks are distributed or the borrower originates an ACH credit transfer. If it's paid on or before the next payroll date, well, there's a shifting of the payroll date moving forward. So in other words, if there is a period, you can start the starting date, and Adam, fact check me on this, that the starting date of the period can be not the time that you received the loan, which was the original marker, but it can be moved forward to the first day of the pay period, the next pay period. And then you have your timing, whether it's 8 weeks or 24 weeks. And then let's go to the end. At the end, you have either the date that the paycheck is paid, or the period ends and then the paycheck comes a week later. So if you pay in arrears essentially for the work that was done, then you are able to pay that paycheck during the normal course, the next payroll period. They're not going to force you, if you pay semi-monthly or monthly and then you're not at that end date, they're not going to say, well, then you have to pay on that end date if your normal paycheck comes out a week later, 2 weeks later. So that's how that works.
Yeah. Can I
Yeah.
interrupt you there for a second, Jack, because it relates to the point. On page 10, what I also found really interesting, we had a lot of questions around payroll costs. Always said paid and incurred. I said paid and or incurred. And then other costs were paid and or incurred. But in the payroll costs, there was still some wondering about, what about that first payroll? What if that covers time that wasn't in the covered period? Because I do pay 2 weeks in arrears. This bottom of page 10, I'll read it. When must payroll costs be incurred and/or paid to be eligible for forgiveness? In general, payroll costs paid or, no mention of the word and, incurred during the cover period are eligible for forgiveness. I don't know. What that tells me is that even if I'm 2 weeks in arrears, I got that first payroll in there. So we had a lot of questions about that because, people that were going to be on the bubble for 8 weeks in terms of having used all their funding, but boy, if they could, because they paid 2 weeks in arrears, but boy, if they could use that first payroll that was like 2 days after they got their funding, but included time from before the cover period, they could include that. They sure would have spent the money. I'm reading that as that money's in there. Now, would I rush out and submit the forgiveness application today? Probably not. I'd probably still give it a couple weeks, but there's no mention of the word and after that initial italicized question. It only uses the word or, which is consistent with all of the other language related to non-payroll costs. So I feel like, I don't know, somebody in Treasury was smiling on the business owner when they put that in and forgot. I would say forgot. I actually think that was purposely omitted. the word and.
Yeah, and that's, yes, the struggle remains in interpretation, hopefully a favorable interpretation, or remaining silent and letting it roll. That because it was, okay, we feel comfortable about the period, the ending of the period, but then what about really that front end of it? Can you reach back a little bit in time? So, all right, so the next thing, and they give an example of a borrower on a biweekly or more frequent payroll about the alternative payroll period. That's on page 11. But again, the payment must be paid less than the first regular payroll date thereafter, meaning like if the covered period ends, you get that until the next regular payroll comes out to make that payment. To Adam's point about owner, employees, and self-employed individuals, on page 13, they talk about the differential of the 8 weeks, and there are two alternative calculations, and one is what ends up being 15.38% of 2019 compensation, and one that ends up being 20.83% of 2019 compensation, and which basically means either it's 15K or 20K rounded as far as what is allowable. There's also a switch with respect to non-cash contributions, whether it's health insurance or other cash contributions with respect to retirement. And I'm not going to go through that unless you want to, Adam, but I like I said,
Nope.
Yes, I agree. Yes. But go through that because we've been getting a lot of questions about, is it in or is it not? And what about, is there a difference between a 0.0001% S corporation holder, ownership owner who is an employee versus one that's a 50% owner? Okay, so go through those as well. Talking about non-payroll costs on page 15, and further to Adam's point, when must non-payroll costs be incurred and or paid to be eligible? And the language says a non-payroll cost is eligible for forgiveness if it was, 1, paid during the covered period, or incurred during the covered period and paid on or before the next regular billing date. So again, if your billing date is later or your payment date is later, but it's within the covered period on the forgiveness side. And then they reiterated the reductions to loan forgiveness based on employee count or reductions in salary, and then reiterating the rules that have been expanded since originally. Originally it was, well, if you make an offer to an employee and they say no or heck no, and then that doesn't count. Our suggestions to you have been, make sure it's documented. You know, for most purposes, many purposes in the legal world, phone calls don't exist unless they were recorded, and then you have issues of whether they were properly recorded. So documentation. And if you can get, and it may be that you may not be able to get something back in writing from your employee, but if you can say, yeah, thanks, but no thanks, and potentially the reasons for it, which is helpful because they have said that if there is a reason on the employee side, if there is a reason that they don't want to come back to work, the government's not going to penalize you. And it could be that they're scared for themselves, that they're taking care of a loved one, or any other kind of justifiable reasons that relate back to the coronavirus. Then they added on this clarification that said that if you are not able to ramp back up your business, not necessarily because your employees are saying no, but it's because that the work wasn't there, or you could not create a safe environment for your own employees, whether it was not enough access to personal protective equipment, whether it was the fact that it was just unsafe to walk into the building in common areas that you don't control, whether it was that you couldn't keep the social distancing that was necessary because of the type of business that you're in, whatever it may be. They've expanded the ability to not be hit with a penalty because you didn't get to certain benchmarks within the regulation and the statute. So, and again, without going through all the details of those are really the highlights of what is in this document. And like I said, not a whole lot of surprises, but more clarifications and some examples that I think are helpful.
So you guys have done a pretty good job of already anticipating a couple of the questions that have come through. So a couple comments. First of all, I've had a couple requests that came through the chat for the 34, 35 page Treasury rule, this IFR, that they didn't change the number, but they just changed the content. So I sent that to those that sent it to me. So if anybody wants that, we're going to probably post it up on our website. And I think on Monday, we're going to do a more detailed analysis that we will put in writing Monday or Tuesday at the latest, and we'll get that out to anybody on our distribution. So be looking for that. But in the meantime, if you can't find it, if you've Googled it, you can't find it, just email me at gfrey@trustbgw.com and just say, hey, can you send me the most recent IFR? And I'm happy to do that. So one of the questions that came through that I think you addressed was, hey, loans after June 5 must use the 24-week period. Haven't we been saying that they have a choice? And it looks like right now it says after it, you don't have a choice. You will use that.
Yeah, and I think clarification. I think we'd always felt like anything before June 5th was going to be 8 or 24. Anything after June, I swear this isn't revisionist history. So Gary will find it on the webinar because self-righteous anger says I'm going to be right. Track some humility, Gary. I think we'd always felt like June 25th it was going to have to be 24 weeks because 8 weeks was never mentioned. Plus, you weren't going to have 8 weeks before June 30th anyway. But yeah, it seems like it's if you're after June 5th, you're 24 weeks.
The next question was, forgiveness applications can be submitted 10 months after the end of the covered period. wasn't that previously 90 days?
I don't think there was anything about 90 days previously, because the dates had to do more with when the lender had to get back to you, and that was within 60 days. And then I think the SBA had to get back to the lender within 90 days that they were going to pay him. I don't recall in the beginning any really specific things on when you would apply for forgiveness. But now we know it's 10 months.
Yeah, I think there were presumptions made prior to this guidance that it was okay. And there were also questions about, well, if I've used the money and I'm within the parameters of full forgiveness, maybe I've even used 100% on payroll, so there's no issue whether 75-25 at the time or now 60-40, then go ahead and roll with it. But we say that with a little bit of hesitation, only because rewind the tape now probably a couple months, it's been several weeks, when they were saying, well, we're going to look and see if you really needed the money when you applied for it. And then they came out with a $2 million kind of safe harbor. But prior, literally 24 hours prior to that, people were giving money back. And so, again, I don't see anything that is in the form of a penalty other than peace of mind of having it done, and you can go on your vacations and not think about it. But other than that, I don't know if there's really a whole lot of reason to go ahead and do it if it's all done. Just hold on to your documentation, because we keep saying interim final, interim, there's nothing that says these are the rules of the road, period, no further modifications to it.
All right, next question is, in speaking about the payroll and or incurred, you're limited to 15,385 during the 8-week period. Say with the and/or incurred payroll, you increase the actual days paid from 56 to 70. If an employee wages are more than 15,385 during the 8-week period, then the forgiveness is reduced by the excess. Is that correct?
I feel like there are a couple different moving parts to that question. If you're on the 8-week cover period, it's 15,385 period. That's the max per employee. So it's not that your forgiveness is reduced. You didn't get the loan for that amount in the first place. So it was just capped at the 8-week annualized number of $100,000. If, however, you elect the 24-week time period, it's effectively triple that number that you can do for forgiveness, but your FTE count will be less, because that is a scenario where business has declined. I've got less employees and I'm just paying the ones that I still have. But then you would need to document why you couldn't bring the jobs back for the people that you didn't rehire. So I think in this scenario, this person has a reduced FTE count, but is paying the people that they still have more money, not in the sense of like, hey, you made 100, now you're making 150, but rather I just paid them for more weeks. Therefore the eligible salary cost by default will be higher. But if they really were making 150 annualized, it doesn't matter if it's 8 weeks or it's 24 weeks, that 50 grand doesn't count, but it wasn't part of your original loan request in the first place because it was already removed from the calculation.
All right, and speaking of that theme, earlier on in this broadcast, Adam, you had mentioned about reduced hours and reduced wages, and the comment and question that came about that was the double jeopardy rule about reduced hours that result in reduced wages count only as a wage penalty, not as an FTE penalty, doesn't it? They did say you can't be penalized twice, but I've not seen how to calculate it.
I think it's actually the other way around. Jack, can you fact check that if you know that handily? I think it's actually the other way around. Wage reductions really are wage reductions. Like, you made 20 bucks an hour, now you make 10, irrespective of hours. The hours reduction that is an indirect wage reduction is only an FTE calculation. I'm 99.9% sure.
Yeah, I think that is accurate as well, but I'll take you up on your 0.01% of uncertainty as well. Yeah, and I go back to, to doing the following the form and doing the calculations and seeing how things turn out, because I think for our clients that provides some clarity through this, and a lot of times answers the questions as to, once you actually mechanically go through the calculations, does it make sense or doesn't it make sense, or maybe there's some issue as to whether or not, and brings up more questions, precise questions. So I go back to my recommendation to go through that mechanical process, whether on paper or through a computer. We do not have a calculator, online calculator. I don't know if you guys have one yet, or anticipate doing one. Actually, there was Paychex. If you're a Paychex customer, and I don't get a commission from Paychex, I just happen to remember this, that they were offering a calculator that goes through all that free to their customers. And I don't know if you have to sign up for their emails to try to solicit you, and then you get access to their calculator or what it may be. But so that may be a helpful resource.
Yeah, I think ADP has something like that too, if I'm not mistaken, but don't hold me to it. Next question is, I have a question regarding the second of the FTE safe harbors listed on the new PPP application instruction. It seems to say that if the borrower had already reduced its FTE count prior to receiving PPP from February 15 to April 26, and the FTE count is restored prior to December, if I had 10 employees and laid off 2 in early March and haven't rehired them yet, but I rehire those 2 FTEs at the end of the 24-week period, then I wouldn't have my forgiveness reduced at all, even though I didn't employ those people during the entire 24 weeks. Is that accurate?
Yeah, because that's meeting there are several different exceptions, and that is one of the exception clauses that you're meeting, which is I hired them back by the end of the year.
Yeah, and yes. And so you've met the safe harbor of the penalty, but what are you using the money for? So then you have the issue as to, now the 60/40 as to use of money that I would expect under that scenario that you use the full employee count to get the money, but you haven't utilized it for the full set of employees because you laid them off. So you need to be aware of the fact that it has to be a proper use of the money to begin with before you even think about the penalties on forgiveness.
All right, let's see here. Next question's from Amanda. If we can submit the forgiveness application when the money is spent and we spend the money at week 16, do we adjust the cap per employee for the weeks we're using, or is it based upon the full 24-week calculation?
Right now, I think our thinking is it's all or nothing. It's 24 weeks or it's 8 weeks.
Yeah, I think that so 2 different concepts. Yes, with respect to that number, right now, I agree that it's the way it's stated. It seems like there's no middle ground. However, with respect to the 60/40 use of funds, and we've been talking about what happens if you only got up to 58%, meaning you spent more on non-payroll over the 40%. I'm not sure if it's been clarified yet as to the partial forgiveness aspect of it. So I know that's being talked about. I don't, my kind of review of what was published the other day, I don't see that in there. And so, it's, go ahead.
I'll clarify that one. On the 60, they may change this, but while the WAT self said a minimum of 60%, so that would imply that it's all or nothing, they didn't update the calculation. So the calculation just simply said, you know, maximum forgiveness is the total of the eligible payroll costs divided by 0.6. That's your total number. So that implies that if you were 58%, you know, it would just be, you know, payroll costs that you actually did spend by 0.6, and that's your total amount. Again, they could change that, but that's the way the forgiveness form is reading now.
Next up is if you received the PPP prior to June 5th and you elect to use the 24-week period, do you have to declare this with the lending institution or the SBA?
You have to write a letter to the IRS receiving a private letter ruling and then call it. I'm just kidding. I don't think we know, but I think we would assume that you just tell the bank.
I think the collective blood pressure rate increased for about like 5 seconds.
Yeah, April Fools.
Yeah, I really think it's just going to be, you're going to let your bank know that that's the period that you use, which should be self-evident from the dates that you provide them supporting the payroll costs.
Okay, this is from Vicky. I understand from what you all said this morning that you could apply for the forgiveness before the end of the 24-week period. Is that correct? Next question or clarification here is, I thought it was inferred that you could apply for forgiveness once you'd spent all the money you needed to get to the 100% forgiveness. Did I understand that correctly? It'd be nice if you did not have to do all the extra work to tally up all the payroll, et cetera, for the entire 24-week period.
You gonna address that one, Jack?
Yes. So I think that the way, if you go through the formulas that you look at, once you choose the 8 or the 24 week, numerically there's some numbers that are impacted by the fact that it's a 24-week period. The comment before about if you're ready to go, then go for it, is that, if you're within the formula, the proper formula compilation, and you've used the money properly, meaning you got it for proper purpose, you used it properly, and your forgiveness calculations are proper, then you're good to go. Now, that brings up a good question into, what I don't know here, because I haven't personally gone through the calculations, is that which of those ratios are impacted by the calculations, because I haven't gone through those worksheets, and I guess maybe I should make that my homework and to create my own little business and go through that to see how that actually works, because I think that's important. And that's why I keep putting my homework onto all of you to go through your own calculations to figure that out. But I'll go through that to be 100% sure. But the comment before was, if you're good to go, then, if you've used the money properly, then there's probably 98% reason not to wait. But the 2% is that I don't see a penalty in waiting, again, other than peace of mind to get it done, because I just get concerned that what else is going to happen? Like, what happens in the event that this next set of infusion of capital into the economy has a retroactive impact on things for the money and the situation that we're talking about now? Probably not. I mean, I think the smarter route is for the government to create a wall between what we have going on now and all the numerics and everything else, and say, all right, you can apply for this new set of funds, and here are the rules. And hopefully we've learned over the past several months what the rules should be, rather than by trial and error. So we have a better and more efficient mechanism from the front end, from the application process, from the distribution of funds, from the forgiveness aspects, that, maybe round 2, we get it right, or at least get it closer to right than it was on round 1. So that's the only reason. That's why I keep saying 98%. If you're good to go, then do it. The 2% is related to the fact that what happens if something has an impact on what you guys have going on now, And, there's a possibility, maybe not a probability, because it just doesn't seem like it is efficient to link the two together. This is program one, this is program two. Let's finish out program one and move on to program two. Yes, there's going to be overlap in timing, but they're two separate loan packages to businesses. And again, that's a Jack theory. So take it for what it's worth.
Yeah, the only things that I can think of off the top of my head, Vicky, are that, one, there was an earlier question where they said, well, hey, if we're only going to use, if we only needed, we needed more than 8 weeks, but we didn't need the full 24, did we reduce the $100,000 calculation by the number of weeks we really needed? I mean, it's a legitimate question that the application is silent on, but, if you're trying to do the right thing, don't use $46,000 when you only needed 12 weeks, which is saying I'm going to go ahead and pay people more than $100,000 annualized in my 12-week period, because even though it's silent on what to do with that, that's not one where I'm going to stand up in court and say, oh, I just didn't know and I didn't understand. The second reason, that we didn't talk a whole lot about, because the 10-month thing had not come out yet in terms of making it definitive in terms of when your last day of applying is. If I put on my tax planning hat for a minute, the bank may say, it may be up to the bank to just say to you, look, prove to us that you haven't spent the money, and why the hell don't you have your application in? Because we want this crap off our books and we want our money back. Like, you could have a bank that says that to you, that kind of forces your hand into applying for forgiveness so they can get the loan off their books and recoup what they've lent to you. But assuming that doesn't happen, really the case for waiting is that, look, unless there's visibility into the deductibility of the expenses, if you were to kick the can and say, look, I'm not going to apply for forgiveness until January 1st, 2021, which pretty much everybody that received a loan using that 10-month test is going to qualify for, you've now delayed the potential payment of that tax bill until April of 2022 instead of April of 2021. And within that window, you're probably not too much at risk in terms of tax rate fluctuation. So, that would be a reason to potentially delay. All that said, if they come out and say that the expenses aren't deductible, or the expenses are or are not definitively deductible, if they are not deductible, I kick the can. If they are deductible, there really, really is no reason to wait.
Okay, this is up from Chase. And as a restaurant operating at 50% occupancy, how do we know what amount of allowance we will be given for a reduction in FTE count? Would it be up to 50%, or is there some type of calculation?
There's not. It's just an exception. I mean, you're basically just saying, look, due to restrictions, I couldn't hire people, therefore my revenue suffered. There's no magic bright line in terms of what that number is.
Yeah, I would say that keeping the concepts separate, which is that this is, if you're not able to get up to the count, your FTE count, is there a reason that is acceptable for not getting there? And so it doesn't have a relationship to occupancy. It doesn't have a relationship to gross revenue of the business. It has a relationship to the fact that it has an indirect relationship, because obviously if, as a result of the fact that you can't operate your business, that your employees don't come back to work. So there's an indirect relationship, but it's not direct, that you can say because of a reduction in gross revenue, net revenue, that now that goes into the FTE exemption on the penalty. So that's where the intersection is that it's an FTE exception and related to the person not coming back to work, or a person not coming back to work for you, versus it being, related to something else like the occupancy or the number of customers or revenue.
Okay, this is from Megan. If we choose the 24 weeks, we can't apply for forgiveness early if we have met payroll at 100% because the FTE count will go through the entire week period. Is that correct?
It's a good question because it says you can apply prior to the end of your covered period if you fully exhausted the funds. What it's silent on is like the no-brainer would be you're going to use the easy form. So you didn't have an FTE reduction. You didn't have a problem with the ratio. You didn't have a problem with salary reductions. If it's the easy form, that seems like a no-brainer. You could do it. When it comes to an FTE reduction, if you've resolved your exceptions, I don't see why you couldn't apply. So what do you think, Jack?
Yeah, I've been thinking about that because it's kind of like a brain teaser, right? In the sense that, okay, so let's go through a couple scenarios. One is that you're in the money, meaning that you're good to go. Checked off all the boxes of doing things properly, your calculations are proper, and you're at full staff. And you apply for forgiveness, but you haven't gone through the entire 24-week period. So alternative A is that you're not allowed to do that, right? And I'm saying I don't know the answer at this point. You're not allowed to do that. It seems logical that you wouldn't be able to do that, because what happens if you don't, in that period between the time you actually asked for forgiveness and then you got to the end of the 24-week period, there was a change. You lost an FTE, for example. The second is that you do have to wait the 24 weeks just to make sure. And the third is that you can apply for forgiveness, but do you have an obligation to notify the bank that you are redoing your calculations for forgiveness? Because understand that, there is a period of time, as we said, that once you make that application, that the bank has to review it. It's a maximum amount of time, not a minimum. And then it has to go to the SBA and they do that. So I think that the theory, or at least the logic behind that is that, unless you are right at the beginning of your 24-week period and asking for forgiveness, like you burn through that money just like that, then you're likely closer to the end of the 24-week period. So I don't know if that's a reason why they haven't addressed it, to my knowledge, but there is some logic to the fact. Well, the logic is that if you are not in the money, if you had sought for forgiveness based on certain assumptions of your business continuing on as is, meaning no penalties, and there's a change in that, then you would need to notify. So for example, you 2 weeks after you file for forgiveness, you realize that there's a miscalculation on your spreadsheet, maybe significant miscalculation. You have a duty to, because you're basically saying when you apply for forgiveness that these numbers are correct. So you're making a certification. And there is language actually in this guidance that came out a few days ago that provides guidance as to what the lenders are supposed to do, which is interesting because previously they said, hey, lenders, we're not going to hold you accountable. It's all borrower information, borrower certifications. It seems like that they are going back and requiring lenders to do a little bit more than what they were supposed to do. Now, there is the argument that, well, they're two different functions. One was processing of the applications. Now we're talking about forgiveness. And now we're talking about banks receiving money in reimbursement for money that they lent out that they're not going to get back. So I can see the logic behind stepping up the obligations on the part of the banks in order to do that. So that means that, and this hasn't changed, that you have an obligation as a borrower to make sure those certifications are correct and to maintain that certification, which is that they are correct unless they're not. And if they're not, then you have a reporting requirement. Again, I cannot point you to a provision, and I have not seen the forgiveness, the forgiveness requirements that a bank maybe has imposed upon a borrower that would say something like that.
Yeah, I think the only, if you think about, well, what was the original underlying assumption between 8 and 24 weeks is that, look, if you didn't, the reason you can fill out the EZ form is that you weren't that impacted, therefore you spent all the money, you don't have any problems. So I think in this particular circumstance, the only scenario where you're going to apply for forgiveness early, but you needed the 24-week period, would be the scenario where you spent all the money and you brought everybody back because now you're fully restored. I don't see a scenario where you could pull off asking for forgiveness where you spent the money, but you're not going to, you're going to try to use one of those other FTE exceptions, like business is still disrupted, I can't bring them back. I made an offer, they refused, because you still don't know because there's still time left on the clock.
All right, next question is from Ann. Can the FTE count include owners? And if not, if they were included when the original application was processed, do we need to amend? The forgiveness application does not include owners in the tables that produce the FTE count. So assumption is maybe they should not be included.
I think they are included. When you say the tables are specific to salary, not the FTE count. There's no table required. I'm saying that I'm not looking at the form, but there's not a table for the FTE count. That's more of your own internal calculation. So I would have thought you would have, oh, David just said, hey, there's a space for FTEs. As long as you're consistent, it probably doesn't matter. But considering that they specifically mentioned that owner salaries are capped because we don't want you firing one of your FTEs and then using all the money for yourself, that implies that owners are counted as part of the FTE calculation. I don't believe there's any language that specifically excludes them.
So here's another point of clarification from Ann. She says, it says includes average FTE.
Yeah, it's no different really.
Okay, box 2 and 5. That's what she's talking about. Okay, another question here from Michelle. Is there a deadline to file the EZ form?
It's the same 10-month as anything else.
Okay, let's see here. Just a comment, ratio won't change by much either way on that calculation. It looks like we have answered all the questions thus far. If anybody has any additional questions, ping us, or you don't have to forever hold your peace, just hold it till next Thursday, because I think we're gonna go back to once a week right now, unless the interim final becomes more final, or we get more interim additions that are really hot and heavy. But let's plan on next Thursday at 11 o'clock. And I'll update our webinar calendar accordingly. But let's just plan on going to every Thursday, at least for now, until we see more need to ramp it up. Let's see if there's any other questions here. All right, good. Thank you, David. Thanks to all. Got a couple really important points out of today. See you next week. Awesome. Thanks for doing that. Thank you, everybody, for joining us. Appreciate you and being flexible as we're trying to adapt to this Flexibility Act and interpret it. And, stay tuned because interim means interim and final does not necessarily mean final. So any other thoughts or parting things here from either you, Adam, or Jack?
On behalf of myself and the chainsaw that is outside of my window right now, thank you all for listening, and thank you for the conversation. I mean, it is, I feel like we study up on this, and you guys are testing and validating and thinking through this stuff with us. So I appreciate that.
Yeah, I'd echo Jack's comments in that it keeps us on our toes and helps us be better advisors to our team and our clients. So definitely appreciate the questions. And also we're trying to bring what we hear during the week as questions to the table. Secondly, after this, I'm headed to get a COVID test. Someone at my daughter's work came down with it, so we're all getting tested just in case. My point being that by the next Thursday webinar, I'll have the results. So either we can move into, hey, negative, let's celebrate, or alternatively, I'll do the Chris Cuomo thing and, keep you posted on what it's like to have coronavirus. So I'm not laughing to make light of it. It is pretty serious, but it could at least give us something more to talk about.
All right. Well, let's hope that it comes back negative, and that everybody else out there stays safe and use wisdom. Thank you for joining us. We appreciate all of you. Have a great rest of the week and a good weekend. We'll talk to you next week. See y'all.
Thank you.